Hello and welcome to the Golden Thumb Rule, a podcast where we decode timeless investing principles with market experts to help you cut through the clutter and focus on what truly matters. I'm your host, Kshitij Anand, and in today's episode, we are diving deep into the world of portfolio management services or PMS, a segment of wealth management that's evolving rapidly, especially for emerging investors. And to help us understand the landscape, we are joined by none other than Mr. Sunil Rohokale, who's a board member of APMI, which is Association of Portfolio Managers in India, and co-founder, CEO, and director of ASK Asset and Wealth Management Group. Sunil, thank you for joining us.
Thank you very much, Kshitij, to have me here.
Thank you for taking the time out, Sunil. And let's start with the basics. For any of our listeners, yes, we'll start with PMS. It's still a technical term. And what exactly is a portfolio management services and how does it work for individual investors?
Portfolio management services, first and foremost, is the regulated, licensed activity approved by the Securities and Exchange Board of India for the Indian fund managers to manage discretionary and non-discretionary equity portfolios or debt portfolios. Now, again, still it's looking very complex, isn't it? Now, I'll make it simple.
Sure.
Individuals who actually have a bank account, they have a demat account, and they go to a broker and buy shares. They pay from their bank account and the shares come into their demat account.
Exactly.
Now, just imagine and think that rather than the individual customer or investor doing this whole activity, you need a lot of expertise. What to buy, when to buy, how long to hold, what is the character of the portfolio stocks you're buying.
Right.
So if you decide to give this, instead of you putting your money from your bank account, going to your own broker and buying the stocks in your own demat account, why don't we find a portfolio manager who is a SEBI licensed and approved fund manager whose job is only to invest on behalf of the customers. So technically speaking, all your operational and expertise of selecting the securities, creating a portfolio construct and a character which suits your needs of investment for long-term compounding is being given to the very evolved, very knowledgeable and very qualified fund manager is called as portfolio management services.
Beautifully explained, Sunil, as always. And, I think for the past 3 to 4 years, or basically post-COVID, we have seen the size of the industry has been expanding at a rapid pace. If you can also give an overview as to, what is the size of the industry and what the future holds, if you can give us some glimpse of that.
Only in the last 5 years, a lot of people have started realizing that there is something called PMS. And because the industry has really grown big, today, the industry, the most important is that we have 300 portfolio managers having 300 different approaches, strategies, philosophies of investment management. So 4,30,000 crore is the assets under management under discretionary portfolio management. And there are 1,90,000 customers who have invested into the portfolio management. All of us as an employees, as a corporate citizens, all we have our provident fund deduction, the PF deduction. And you know who manages the money?
Okay.
EPFO. And how does EPFO manage? EPFO manages through portfolio management services. So today, 27 lakh crore of all the employees in the country is managed by EPFO through the portfolio management services. So portfolio management services today is actually managing 35 lakh crore. Out of that, 27 lakh crore come from the EPFO. That is the credibility of the portfolio management services as a platform has grown. Now let's understand we all know pre-COVID, post-COVID era for capital market.
Sure. Yes.
Last 10 years, portfolio management services have grown 20% in AUM. And last 5 years, it has grown 30% in CAGR terms in portfolio management services AUM. The acquisition of number of customers also are no different.
Mm.
They have actually moved 23% CAGR in the last 5 years. And then I say that uh, mutual fund sahi hai, but PMS bhi sahi hai.
And let's also quickly touch upon the fact that there's often confusion around PMS products. As you rightly pointed out, that there are 300 odd strategies which are already running. So, what are the most common myths or misconceptions about PMS that you think need to be addressed?
A lot of people who think that this product is only for rich, ultra rich, because a lot of times people relate that richness or ultra richness to do with the ticket size. That is the first part. Second part, a lot of time people do believe that it's very complex. It is a fear of unknown. It
Yes.
takes a lot of time to really get the portfolio management services account activated. Now, let me tell you one by one, correct? And how these are all illusionary ghosts and they are not real, correct? First and foremost is the portfolio management service is not for rich. The mutual fund are generally taken the mandate and mantle to do financial inclusion. So they start with 500 rupees
Ah,
application. The
right.
portfolio management services is where you start doing very specialized, tailor-made products which are suiting to the customers, investors' need.
Hmm.
And they are basically very closely coordinating with the investor's demand, requirements to fulfill his long-term investment purpose and objective. So the ticket size over a period of last 15 years, the portfolio management services was 5 lakh rupees.
Right.
2012, it became 25 lakh rupees. And 2000 and maybe 20, it became 50 lakh rupees.
Right.
Now, the regulators have probably thought that Indian economy was 1.3 trillion when we were 5 lakh rupee ticket
Exactly.
size. When
Right.
Indian economy has become 4.5 trillion, the ticket size has gone to 50 lakhs. So technically speaking, it's all inflation adjusted increase in the ticket size where each one of us bank accounts has been swallowed. Unlike the mutual funds where they have to be little broad based, they have to be little closer to the indices because the purpose of the schemes and the regulations do not give them that much of flexibility. So they have typically maybe 70, 80 stocks in a mutual fund scheme. But in portfolio management approach, you generally have very concentrated 20, 25, at times 30 stocks portfolios. So there is a flexibility for the fund manager in portfolio management. So it is not meant for the rich. It is meant for anybody and everybody who has the risk appetite, risk profile, and a purpose and objective to invest into portfolio management. That's first part. Now, complexity part. There is no bank account required. The portfolio managers opens a dedicated demat account for the customer, investor, and there is a money to be transferred from the customer to the portfolio manager's pooled account.
Right.
Correct. Now, and there is a power of attorney. So today, all these things, many of our members from APME have digitized everything. So on a click of a button, in the next 5 or 7 minutes time, you can actually invest online. And all this fear of complexity, too much labor, too many signatures is all taken off. It become a green PMSs. Basically, there's no paper required.
Absolutely. And let's zoom out a bit, Sunil. And what major trends are shaping the PMS industry in, FY25 or whatever, or in FY26, you could say that. Are younger investors sort of starting to show some interest in this space? Because, we keep on talking about Gen Z taking part in the mutual fund space, actually, pushing the SIP to 27,000 odd crores at this point in time. But yes, you've been tracking the industry for quite a while now. Is that a trend that you're also seeing in the PMS space as well?
So the big trend what I'm seeing in portfolio management services is that this is no more a product for a particular category,
Okay.
like say rich or ultra rich or HNI, ultra HNI, the family offices. It's actually available for all. Second part is that what we have seen is that the Gen Zs or Gen X probably are the ones who are more amenable to this platform because they are open to change and they
Exactly.
are willing to understand what are they getting into. And this new generation, so Gen X, Gen Zs, and to that, I think anybody who is post 1970s born is very, very amenable. And I could see that there is a quest to diversify. So there are two drivers. One is that they have a curiosity to know how the portfolio managers are uh, differentiating themselves. Second part, the most important, they say, I want to diversify my platforms. And third part, they said, I want to generate the superior risk-adjusted returns on a consistent basis on all cycles. The ability and agility of the portfolio managers is far superior because of the flexibility what they get into the platform to manage these investors who are little evolved than the mutual fund industry.
Also, every investor looks for that guiding principle, you could say that, or that one mantra to follow. Could you share your golden thumb rule, the key principle, the key principle investors should keep in mind while investing through PMS?
But I have my one, and I should share that part.
Absolutely.
I don't time the market. I believe in uh, spending time in the market because the purpose of investing with time, say portfolio management services, if the horizon is of 5 years, I think the experience of investing long only investing, okay, you get compounding experience of all cycles and and different times in the market. So it is not about timing the market; it is the time in the market to experience the compounding experience to generate absolute returns. That's my principle and golden rule of investing in whatever I do.
Perfect, sir. Perfect golden words coming in there. And let's shift gears a bit and talk about the cost, if in case we can do that. But what should investors know about expenses involved in PMS, and how should they evaluate them, when choosing a product?
There are two products, the fixed fee product and the fixed and performance fee product. Typically, the when you go for the fixed fee, it is a fixed fee and nothing else. In case of the fixed and the variable, which is performance fee, your fixed fees are typically between 1.5%, and your performance fee is after some hurdle. The hurdle may be that investor should make 10% returns before the fund managers start getting the additional share of performance so that his fees moves up. So technically speaking, 10% hurdle, 15 to 20% performance fee after the hurdle actually brings back to you the 2.5% only.
Finally, as technology reshapes every part of finance, how do you see digital innovation impacting PMS and personalized wealth management, especially for the next generation of investors?
I see a big change and a trend that AI being used in research, big time, because the historical data, the AI does wonderful job. For example, reading an annual general report and asking the AI to give me a summary of the annual general report means a lot. Second part is that the tracking of the company for last 10, 15 years time, industry for 10, 15 years time, the productivity of our fund managers and the research team have completely changed. And I think that technology evolution on the other side is actually one helping. The third part is that the market itself is also throwing up the companies which are technology driven companies. They
Exactly.
exist because of technology. They disrupt. They solve something which is fundamentally very, very strong. Correct? And we saw those companies getting listed. So I think to deal with that kind of companies, you also need a bend of technological mind. In terms of technology and portfolio management, I think it is the front end and the front office and the middle office is significantly changed at this point of time. Is what I probably think is making a difference.
Absolutely. Well, Sunil, thank you so much for sharing your insights today. And it's clear that PMS isn't just a niche product anymore. It's becoming a strategic tool for serious wealth creation across investment segments. And to our listeners, remember, wealth building isn't about shortcuts. It's about strategy, discipline, and following that one golden thumb rule that works for you. Until next time, this is Kshitij Anand signing off from the Golden Thumb Rule. Stay invested, stay informed. Thank you so much for your
Thank you. Thank you very much.